back. Let's go to top picks from Shane Obata. Top pick number one, Broadcom, ticker symbol AVGO. Shane?
Yeah, Broadcom has been a great name for us, and we're continuing to hold this as a top pick or one of our core positions especially in our tech mandates. So this is a pretty well-diversified company. It's mostly a semiconductor company, but there's also a very slow-growing infrastructure software business. And what we're really excited about lately, we're talking about where else to look besides Nvidia when it comes to AI. So Broadcom is going to be, we think, one of the first beneficiaries after Nvidia. And the funny thing is, unlike Jensen, who's the CEO of Nvidia, and he's always fully embracing whatever trend is coming his way, right? So he's saying, generative AI, this is the next iPhone moment, for example. So Broadcom's management is more conservative. They're kind of taking it as it goes, and their estimates are that AI-related revenues will grow to 25% next year from 10% in 2022. That's based on actual orders and not just them hypothesizing about what can happen. And so there's two important areas that they're benefiting from. So the first one is these custom chips that they're building with companies such as Google and Meta. So I think these companies looked around, they said, okay, we don't really love how much power Nvidia has, so why don't we try to build some things internally? So we've seen it with Apple's M1 chip, we've seen it with Google's TPUs, Amazon and Meta all doing their own chips internally. Well, some of them are partnering with Broadcom to do this, and they're built to do Google's workloads, for example. So this is multi-billion-dollar partnerships. So the Google partnership was already in the billions, and then the Meta partnership is expected to get into the billions. So these are going to be significant parts of the business very soon. And the other part is on the networking side. So to explain this at a high level, basically, when we want to do more AI computing, we need more computing power, we need more GPUs, we need more CPUs, we need more of that power, but we also need to make sure that our networking capabilities are going to match. So we need to make sure our bandwidth is high, how much information can be translated or moved around, and also the speed of that. And another thing that's going to become increasingly important is how energy efficient it is. And so all of those things, we think Broadcom is doing well with its networking chips. So exposed to AI in a couple different ways, but that's not the whole story. We like the whole business, but we do find that exciting.
Okay. Blackstone is number two, top pick on this day, ticker symbol BX on the New York Stock Exchange.
Right. So I pitched last time, I think I was on, I pitched Brookfield Asset. It's the same idea. We think that the alternative asset space is dominated by a small number of companies that just have tremendous scale. There's only a few businesses that can do the deals at the higher end. We've seen Brookfield on a deal-making spree this year, for example. They just have good scale and best practices they can share across businesses. So Blackstone started in private equity, but has become much more diversified. Most of the business is actually related to real estate now. So they've been caught up in the same concerns that we've seen in the market about commercial real estate and whatnot. They're much less exposed than Brookfield is. They have said that office represents just 2% of their US real estate portfolio now. So we think likely this is going to be a difficult year, maybe 6 months to 18 months for Blackstone, given the real estate environment. But the overarching macro is that we think we're getting close to the peak in rates. That should help the real estate market. It should help deal making. And Blackstone has over $190 billion of dry powder. So when some others are under pressure, they have the ability to make good acquisitions. So it's a story that we think will play out over time. We expect that they can do easily 15% growth in fee-related earnings over time. So it's a great company. I would consider them the best alts manager in the world.
Okay, let's go to Nintendo. It's a Japanese traded stock in Tokyo. It is, of course, a gaming company, and there you see its ticker number on the Tokyo Stock Exchange. Shane.
Yeah. Try something different here with a Japanese name, but I think the Japanese market has been very strong this year. It's becoming more shareholder friendly, and when you look outside of the States, you often find more value, right? So I think people will continue to be interested in Japan. Nintendo doesn't fall into the deep value camp. It's forward P's like 20 times. This is a little bit of a nuanced story here because they're heavily dependent on console sales. So the Switch was tremendously successful, selling well over 100 million consoles. But when you reach year 3, 4, 5, 6 of your console cycle, your sales naturally decline, and even if you're still selling games. So this is a company that could have to deal with negative sales growth for the next couple years. But what we're excited about is with the launch of the Super Mario movie, which was a blockbuster, I think it was 1.3 billion in worldwide gross, which is pretty awesome. The whole idea of IP synergies across divisions, which we've heard many times from different companies, this is a company that can really do that. And so the basic gist of it is you take IP from your video game franchise, Zelda, Pokemon, Super Mario, and then you make a movie or use it in some other format. And then when people watch the movie, that drives console sales again, and that drives video game sales again. And so we think that kind of fortuitous wheel can continue to help Nintendo and help the company probably surprise to the upside, even though the expectations are quite low.